Very good afternoon, investors. You're now on KleverStock with me, Wan Izul, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with Bursa Malaysia updates. The FBM KLCI opened lower on Tuesday morning, falling 9.57 points to 1,702.76. The local bourse is grappling with a lack of domestic catalysts and a heightened risk-off mood triggered by the escalating transatlantic feud over Greenland. With Wall Street closed on Monday for a public holiday, Malaysian traders were left with few positive leads, focusing instead on the potential for a trade war between the US and the European nations. Despite the early dip, Rakuten Trade remains optimistic about the index's underlying strength, noting that foreign fund inflows continue to provide a solid floor. The research house expects the benchmark to find support and potentially trend back within the 1,710 to 1,720 range later in the session, provided that foreign net buying persists as seen in recent weeks. Now, the most significant domestic drag on the index remains IJM Corporation Berhad, which saw its shares slide a further 12 cents to 2 ringgit 53 cents this morning. The construction giant confirmed that officers from the Malaysian Anti-Corruption Commission (MACC) and the Inland Revenue Board (LHDN) visited its offices on Monday. The investigation centers on allegations of a 2.5 billion ringgit money laundering scheme involving top executives. IJM stated in a filing to Bursa Malaysia that the company is cooperating fully with the authorities and assures stakeholders that business operations are continuing as usual. Now, this legal cloud has raised serious concerns regarding the feasibility of Sunway Berhad's 11.5 billion ringgit takeover bid for IJM, with analysts warning of heightened due diligence and execution risks. MACC Chief Commissioner Tan Sri Azam Baki confirmed that the investigation is ongoing, following reports that the UK's Serious Fraud Office (SFO) had also launched a probe into multi-billion ringgit transactions linked to two persons of interest within the company who are currently overseas. Conversely, some of yesterday's hardest hit counters showed signs of a dead cat bounce. SMRT Holdings, which plummeted more than 55% yesterday after a surprise earnings downgrade and a suspension of intraday short selling, rebounded 1.5 cents to 20 cents. Capital A also bounced back 1.5 cents to 52 cents, recovering slightly from the volatility surrounding its recent aviation business consolidation. Now, the banking sector remained the primary weight on the blue chip index, reflecting the global risk-averse sentiment. Hong Leong Bank led the retreat, dropping 32 cents to 23 ringgit 98 cents. That's followed by CIMB, which shed 8 cents to 8 ringgit 29 cents, and Public Bank losing 6 cents to 4 ringgit 74 cents. Now, as the parliamentary session continues in Kuala Lumpur, investors are keeping a wary eye on both corporate integrity developments and the developing blackmail tariff war in the Atlantic. Moving on to our local currency and foreign exchange. The Malaysian ringgit extended its winning streak on Tuesday morning, opening firmer as the US dollar index retreated amidst escalating transatlantic tensions. At around 8 a.m. this morning, the local currency strengthened to 4.0475 or 4.0575 against the US dollar, up from Monday's close of 4.0520 or 4.0570, as global investors sought safety in safe haven assets and emerging market currencies with strong domestic fundamentals. Now, the ringgit's resilience was significantly bolstered by the International Monetary Fund (IMF), which on Monday revised Malaysia's 2026 GDP growth forecast upward by 0.3 percentage points to 4.3%. In its latest World Economic Outlook update, the IMF noted that Malaysia is shaking off trade and tariff disruptions, through robust domestic demand and its strategic position in the global artificial intelligence and semiconductor supply chains. Now, the fund also raised its 2026 global growth projection to 3.3%, citing a massive surge in AI infrastructure investment as a key tailwind. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Abzanizam Abdul Rashid observed that the DXY fell 0.35% to 99.050 points as traders reacted to renewed and intensified remarks from the Trump administration regarding Greenland. Now, over the weekend, President Trump threatened a 10% tariff starting February 1st on 8 European allies, including the UK, France, and Germany, unless the US is permitted to purchase the Arctic territory. Abzanizam said that this has signaled a clear shift into a risk-off sentiment, with gold emerging as a primary safe haven, while the ringgit benefits from the positive assessment by the IMF on Malaysia's economic conditions. Now, in the broader currency market, the ringgit displayed a mixed but generally firm performance. It appreciated against the Japanese yen to 2.5591 or 2.5656. It also appreciated against the British pound to 5.4313 or 5.4448, and it remained virtually unchanged against the Philippine peso. Regionally, the local note gained ground against the Singapore dollar, the Thai baht, and Indonesian rupiah, reflecting its status as one of Asia's most defensive and resilient currencies in the face of shifting global trade policies. Looking ahead, the ringgit is expected to remain in a range-bound trade between 4 ringgit 4 cents and 4 ringgit 6 cents today. Market participants are now closely monitoring the Bank Negara Malaysia Monetary Policy Committee meeting that will be happening on Thursday. With the IMF maintaining an appropriate stance on Malaysia's current monetary policy and projecting stable inflation at 2%, the central bank is widely expected to keep the OPR or overnight policy rate steady at 2.75% to anchor long-term growth. Now for some local economic news. Malaysian equities are entering 2026 as a premier defensive play in Asia. That is according to HSBC Global Investment Research. While the research house projects the FBM KLCI to climb toward a year-end target of 1,750 points, it cautions that further gains may be capped by rising valuations and a significant multi-year trend of foreign institutional outflows. The benchmark index, which closed at 1,712 on Monday, has been resilient despite what HSBC describes as relentless selling pressure from foreign institutional investors. In 2025, last year, foreign institutional investors sold roughly 21.5 billion ringgit of Malaysian equities, the largest annual outflow since the pandemic-driven exodus of 2020. Now, this pressure has been exacerbated by soft earnings expectations, with last year's corporate earnings growth estimated at just 1%. Now, despite the foreign sell-off, Malaysia is being positioned as a stable middle-of-the-group market within Asia. Harold van der Lint, HSBC's head of equity strategy for the Asia Pacific, noted that the current global interest rate environment is a double-edged sword that uniquely benefits the Malaysian index. Van der Lint stated that interest rates remain relatively high around the world, and this is positive for the banks, including in Malaysia and Singapore. Now, given that banks carry the heaviest weighting in the FBM KLCI, their ability to maintain flat to stable net interest margins, or NIMs, serves as a critical flaw for the market. A key theme for 2026 is Malaysia's emergence as a neutral ground for the global AI arms race. As the US tightens curbs on the sale of advanced AI chips to mainland China, many Chinese technology firms are reportedly shifting their AI model training to Malaysian data centers. Now, this shift reinforces Malaysia's status as a top-tier destination for data center investment, particularly in Johor and the Klang Valley. However, the research house noted that direct exposure to this AI boom within listed equities remains concentrated in a few specific sectors, such as utilities, real estate, and construction. Now, Van der Linde warned that while AI was a primary market driver in 2025, any moderation in the AI cycle poses a risk. He noted that valuations in tech-heavy markets like South Korea and Taiwan have already run up significantly. Bursa Malaysia currently trades at a 12-month forward price earnings or PE multiple of 14.7 times, which is broadly in line with its 5-year average. HSBC believes that this suggests limited room for multiple re-rate without a clear new catalyst, maintaining a neutral stance while viewing the market as a safe harbor rather than a high growth engine for the year ahead. Continuing with more economic news updates, Bank Negara Malaysia (BNM) is widely expected to maintain the overnight policy rate (OPR) at 2.75% during its first Monetary Policy Committee or MPC meeting of the year happening on Thursday, January 22nd. Now, economists and market analysts suggest that the central bank will opt for a wait-and-see approach, following a resilient economic performance in 2025 and a benign inflation outlook for the year ahead. The expected steady stance follows a preemptive 25 basis point rate cut delivered in July last year, which brought the OPR down to its current level. Bank Muamalat Malaysia Berhad chief economist Dr. Muhammad Abzanizam Abdul Rashid, he noted that the move appears to have achieved its objectives, with advanced estimates showing the economy expanded by a robust 5.7% in the fourth quarter of 2025. Now, this propelled full-year growth to 4.9%, comfortably within the government's target range. Abzanizam said that the latest advanced GDP estimates clearly suggest that the Malaysian economy is resilient. It also indicates that economic policy reforms and implementations have yielded their desirable effect. That would mean the preemptive cut in July 2025 has served its purpose. He also added that while the central bank has the policy space to ease further if needed, the current stability in inflation, which stood at 1.4% in November, renders additional reductions unnecessary at this stage. Financial markets have already priced in a no-change decision, with the 10-year Malaysian government securities or MGS yield holding steady at 3.47%. Economist Jeffrey Williams cautioned that any surprise move by the MPC could unsettle investor sentiment. Williams warned that the capital markets are expecting no changes, so if there was a change, it would spook the markets. The economist also highlighted that with growth projected to remain sustainable at 4% to 4.5% in 2026, as well as inflation hovering near long-term averages, the current monetary settings are appropriate and supportive. Now, the ringgit's recent strength also factors into the policy debate, trading at approximately 4 ringgit 6 cents against the US dollar, a significant appreciation from 4 ringgit 48 cents a year ago. The local note's performance reflects a narrowing interest rate differential as the US Federal Reserve continues its easing cycle. HSBC Global Research recently noted that a steady OPR, combined with Malaysia's status as a defensive haven in Asia, has helped offset some of the persistent foreign institutional selling seen throughout 2025. Now, as the government rolls out the first initiatives under the 13th Malaysia Plan and prepares for the Visit Malaysia 2026 campaign, a stable interest rate environment is seen as a crucial anchor for corporate investment. Thursday's decision will be the first of 6 scheduled MPC meetings for the year, providing the initial signal for Malaysia's monetary trajectory in a year marked by both high-tech growth and evolving global trade tensions. We'll now take a short break, but don't go away. We will return shortly with corporate news developments right after this. And welcome back to the Midday Roundup. Let's continue with some corporate news updates. Branding and marketing solutions specialist SBS Nexus Berhad made its debut on the ACE market of Bursa Malaysia today, opening at its IPO price of 25 cents. Despite a broader market pullback that saw the FBM KLCI shed over 8 points in early trade, SBS Nexus maintained its valuation with a market capitalization of approximately 122.5 million ringgit at the opening bell. Now, the listing follows an exceptionally strong response during the balloting phase, where the public portion of the IPO was oversubscribed by 22.28 times. Total of 5,579 applications for 570.28 million shares were received, with the Bumiputra portion seeing an even higher oversubscription rate of 23.38 times. Now, all shares allocated for eligible directors and employees were fully taken up, as were the private placements to selected institutional and Bumiputra investors. Now, from the 30.63 million ringgit raised in new capital, SBS Nexus has earmarked nearly half for physical and operational expansion. Now, the group plans to allocate 7.1 million ringgit, or at least 23.2%, to set up a new headquarters equipped with in-house production studios, which is expected to improve operational efficiency and content turnaround times. Another 7.25 million ringgit, or 23.7%, is dedicated to general business expansion, including the rollout of its My Usahawan media platform. Managing Director and CEO Mr. Wong Chun Mun highlighted that the company is specifically targeting the underserved Malay-speaking SME market. Wong said that we have built a successful business template for the Chinese market, and we now aim to replicate this for the Malay-speaking business community. He continued saying that our wide range of service offerings, from digital billboard advertising to comprehensive content creation, is well positioned to meet the evolving demands of modern businesses. Now, SBS Nexus enters the public arena with a robust financial track record. The group's profit after tax, or PAT, grew at a compounded annual growth rate of 219% between the financial years 2022 and 2024. Now, for the 9-month period ended September 30th, 2025, the company reported a net profit of 7.12 million ringgit on the back of 33.63 million ringgit in revenue, already exceeding its full-year revenue for 2024. Analysts remain optimistic about the stock's medium-term prospects. Malacca Securities has assigned a fair value of 34 cents to the counter, citing its asset-light model and strong first-mover advantage in targeting regional SME niches. Meanwhile, TA Research and Public Invest have set fair values at 29 and 27 cents respectively. M&A Securities served as the sole advisor, sponsor, underwriter and placement agent for the IPO. Now, as the Visit Malaysia 2026 campaign gains momentum, the demand for high visibility branding and digital out-of-home, or OOH, advertising is expected to surge. SBS Nexus, which currently holds less than 1% of the domestic offline and digital branding markets, believes the listing provides the necessary platform and capital to capture a significantly larger slice of the 9 billion ringgit industry. Up next, we have some business updates. OMS Group, a premier provider of sub-sea digital infrastructure, has announced a landmark contract with renowned Norwegian shipbuilder Ulstein for the design and construction of 2 next-generation cable-laying vessels. Now, this strategic expansion brings the group's great-class fleet currently under construction to 4, reinforcing its position as a global leader in the subsea telecommunications industry. Now, the new vessels, scheduled to enter service in 2028, are specifically engineered to address the critical capacity constraints currently facing the global subsea cable market. As the demand for international bandwidth surges, driven largely by the proliferation of artificial intelligence and the massive build-out of data centers, fleet capacity has become a significant bottleneck for global connectivity. Now, OMS Group CEO Ronnie Lim said that with global connectivity demand accelerating, fleet capacity has become a critical constraint for the industry. Now, these vessels significantly enhance our ability to execute complex submarine cable installations reliably and at scale, positioning OMS Group strongly for the next phase of global digital infrastructure growth. The partnership with Ulstein focuses on high-capacity installation capabilities coupled with a sharp reduction in environmental impact. The ships, based on the Ulstein XX252 design, will be 130 meters long and 22 meters wide, with a massive cable carrying capacity of 6,500 tons. They will feature Ulstein's signature X-bow hull design, which reduces motion and wear on cables, allowing for safer operations in rough sea conditions. Furthermore, the integration of advanced technologies such as the Ulstein Power Variable Speed Generator will set new standards for operational efficiency by reducing fuel consumption and emissions. Dato' Lim Sun Fu, the founder and chairman of OMS Group, said that this latest expansion reflects OMS Group's clear strategic direction to invest and build a future-ready fleet that underpins the rapidly expanding global digital economy. Now, OMS Group, which has a portfolio investment of more than $800 million, currently operates 5 active cable vessels and several barges, providing end-to-end marine services, including the installation and repair of deep and shallow water fiber optic systems. Now, this latest order follows the keel laying of 2 other Great-class vessels, the CS Genesis and CS Triumph, earlier this month in Vietnam. As subsea cables continue to carry over 95% of the world's data, the expansion of the Great-class fleet is seen as a critical move to strengthen the invisible backbone of international digital infrastructure during the ongoing AI supercycle. And finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. Here are the headlines. At number 1, we mentioned earlier, IJM Corporation Berhad said officers from the MACC and LHDN were present at the office or the company's office on Monday to obtain information as part of their process. Our next headline at number 2, Bursa Malaysia Securities has approved Perak Corporation Berhad's proposed regularization plan, enabling the PN17 company to proceed with a multi-part restructuring. At number 3, Bursa Malaysia Securities has approved also the voluntary withdrawal of Kuchai Development Berhad from the main market, with the delisting to take effect on January 22nd, 2026. Up next, Favel Favco Berhad has secured 3 new contracts to supply tower and offshore cranes worth a combined 76.3 million ringgit. Another one to look out for is CAB Cakaran Corporation Berhad's 58.02% owned unit, Pasaraya Jaya Gading Sedian Berhad, entered into a sale and purchase agreement with Fa Leong Sedian Berhad to acquire an industrial building with an office in Kuantan for 2.8 million ringgit. Our next headline at number 6, Reservoir Link Energy Berhad has secured a contract from Hibiscus Oil and Gas Malaysia to provide third-party subsurface review and technical assurance services for the PM3CAA carbon capture and storage project. And finally, OpenSys Berhad has secured a 22.1 million ringgit order to supply new cash recycling machines. Now, Teladan Group Berhad has also launched the Bukit Intan Commercial Centre in Seremban, marking its first project outside its home base of Melaka. That's a wrap for the Midday Roundup with me, Wanizal, on KleverStock. Thank you so much for choosing us, investors. Stay tuned for our upcoming live stream program and have a wonderful Tuesday ahead. We'll see you again soon.